Good to see you both. Anastasia, I'll start off with you. Jackson Hole was looked previously as potentially a big risk factor in the markets this week, and yet now it's turning out that most expect nothing, and that's why the markets are climbing?
That's right, Melissa. I think the expectations for the Fed to do anything at Jackson Hole have been lowered quite a bit. And that was a big worry, right? If the Fed was talking about taper and maybe even tapering amidst the surging Delta cases, that was not going to be great for the market. But now the base case for everyone is there's going to be a lot of talk among central bankers at Jackson Hole, but it's going to be no taper and there's not going to be much action. So I think that's a positive for the market. And that's why you've seen the reopening trade come back in vogue in the last few days, and particularly the energy shares. I will point out energy is one sector that was a little bit nervous going into Jackson Hole. If you look at options pricing, that's where we saw some of the dislocations. But now, as the Fed is pushing back the taper, hopefully until after the Delta cases peak and drop, that means that we don't have to worry about materially higher dollar. And hopefully we'll see payrolls come in still strong. And once we have those two pieces of information, I think that's when the Fed can ultimately taper. But back to energy. Energy is one sector that is really kind of feeling the relief from this postponement this week.
Yeah, I mean, Paul, do you think that the bounce back in energy can recapture the steep losses that we saw in the month of July?
Yeah, I do think so. When you look at what's happened to oil in the last 2 weeks here, you saw that 7-day losing streak. You saw a big bounce in the last 2 days. It's a real sharp reversal after some serious weakness. And when you look at prior periods where you've seen that kind of a turnaround in oil, the energy sector has tended to perform well going forward. And I think just with a more dovish backdrop, you have the Fed. It started with Kaplan last week when he suggested that he may have to reassess his view if the economy shows signs of slowing. And then just the fact you can't really have the Fed come out and say, that the worst of COVID or that COVID is behind us in terms of its impact on the economy when a conference that was being held in the most lowest density areas of the country had to be switched from in-person to all virtual. So it would just not be the greatest of optics. And then lastly, we always focus so much on what is the Fed going to say at the Jackson Hole conference every year, and we get so worried about it. But if you look back, since the financial crisis, when we really started focusing on Jackson Hole, the performance of the market has really seen very little in the way of a hiccup after Jackson Hole, with gains, 2/3 of the time in the month after, and much more consistency of gains in the 3 months after. So I think it's August. We're looking for something to focus on, and Jackson Hole fills that void, but it's usually more bark than bite.